Hey, what's up guys? John here. Something massive is happening to the housing market. If you're a real estate investor, you plan to be. If you are a landlord, look at what they're doing. They are now saying that if you have a federally backed mortgage, you're going to have all these new restrictions on your property. And they're just bringing this forward, a complete curveball to the housing industry, a complete curveball to the real estate market. I'm going to break this down for you because I believe it's going to push tens of millions of people out of the landlord business. I think we're going to see a lot of people simply selling off their properties, a lot of people just walking into really hard times because of some of these pretty insane new policies that are right around the corner.
San Diego woman says squatters are living in her rental home and she can't get rid of them despite them owing 9 months rent.
This is what's happening. It's shocking. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's really going on in the housing market. Now, I love real estate investing. And probably 90 cents of every dollar that I'm worth is from real estate investing. And I'm very optimistic about real estate, but at the same time, I'm looking at the downside. I'm looking at the risk. There's a lot of risk in the short term, not just in commercial real estate loans, but in a lot of these new landlord-tenant laws, a lot of these new restrictions, a lot of these new regulations, and the communication from the government and the mainstream media to the general public about landlords being the problem is something we need to follow, because I believe this is going to greatly change the amount of risk that landlords and property owners assume because of all these big curveballs. And so how can we as investors underwrite risk if we don't know what's happening? So I'm going to break it down for you in this video. If you'd like to fix your credit, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. Go there, schedule a free strategy session. We can see how we can help you fix your credit to position you for the greatest wealth transfer of all time. We're in it. You know, started 2020, 2021. And the next couple of years is going to get more and more and more extreme. Take a look at this. So industry warns against tenant protections attached to federally backed loans. Biden administration is eyeing new rules for some multifamily properties. Now, for context, government-sponsored entities, right? About 50% of all mortgages in the U.S. are backed by a GSE, government-sponsored entity, which makes them far more popular, right? So when they control roughly half of the housing stock, right? And they say if you have this loan, now you're going to start to fall into these new guidelines, and it's concerning. On the last day to comment by adding tenant protections at multifamily properties with federally backed loans, a major industry group unleashed a full slide of objections. Rent control and other regulations attached to multifamily loans from government-sponsored entities would encourage the industry from using financing, right? So they're going to be pushing people. If you want to, evade a lot of these new things, you're going to have to pay all cash, right? Essentially, you're going to have to pay all cash. And if you do, then you're going to have a lot more freedom and rights over your property. And if you don't, well, then the government's going to tell you how to operate that property. The results would be less affordable housing production, the group said. The MBA argued that added protections would make enterprise loans more cumbersome and imposing compared with other means of financing. They would also violate the sacrosanct landlord-tenant relationship, which is unrelated to commercial mortgage servicing, the group said. Lenders and servicers do not have a direct connection with tenants or the ability to monitor the report on the landlord-tenant relationship, the MBA said, adding that loans are serviced on behalf of borrowers and entirely separate from the tenants. 100%, I agree. The tenant protections would be temporary in any case, right? Just like 14 days, right? It's just going to be temporary. No, this is not going to be just temporary. They might say, because they expire when the loans do, often in 5 years or less. No, it's going to be something that's going to start small and it's going to get more and more and more aggressive. It's death by 1,000 cuts. If people don't know that now, I don't know what else to say. The Biden-Harris administration has been looking for ways to enhance tenant protections, such as using the leverage. The federal financing agencies' regulation of multifamily properties generally falls to states and local governments, with some apartment complexes that have loans supported by government-sponsored entities such as Fannie Mae and Freddie Mac. Yeah, most of them do. The administration has said it aims to prevent egregious rent increases at those multifamily buildings. I mean, what about property taxes? What about the egregious hikes in property taxes, right? Or the egregious hikes in property insurance? There's no pointing the finger at insurance companies, no pointing the finger at increased tax bills. It's just pointing the finger at landlords, right? For a reason. The real estate industry prefers to limit federal involvement to subsidies for financing properties development and for tenants. The most effective way to help renters in need is to increase the supply of affordable housing by fully funding successful proven programs like Section 8 low-income housing tax credits and more, the Mortgage Banker Association said. The FHFA issued a request for input in May on tenant protections at multifamily properties with mortgage backed by Fannie and Freddie. The two agencies have public missions to support the availability of safe, decent, and affordable housing, the FHA said. The request for input due July 31st aimed to help the agency find ways to advance the GSE's mission, but the cost of staffing the systems required to monitor and enforce new requirements on GSE-backed loans would do the opposite by making the financing more expensive. The FHA said has been collecting information about tenants' experiences, stakeholder perspectives, and ideas to improve data collection and regarding the size and scope of tenant issues. Rent control, the MBA said, in its letter, runs completely counter to the White House Housing Supply Action Plan, which stated that President Biden believes the best thing we can do to ease the burden of housing is to boost the supply of quality housing. Now, we're looking at this situation, right? We're looking at the world we're in. They say that 70% of inflation is because of housing costs, right? That's what they're pointing the finger at. Housing costs is the reason that we have this horrible inflationary problem. And if we could just combat these expensive rents, then everything would be, going back to normal. But the reality is, I simply don't agree with that. I think that energy prices are going to continue to rise in the short term, and the cost of everything else is just going to continue to rise. But property owners, landlords, they're the easiest target. They're the easiest target, because if you control the property, you control the people, right? This is essentially what's happening. We're going to witness something, I'm telling you, over the next couple of years. We're going to witness something huge in real estate investing. I think that it's going to be very, very dangerous to be a real estate investor that's leveraged with a lot of debt in the coming year or two. Because what's going to ultimately happen, we're going to see borrowing costs continuing to likely rise in the short term, insurance and property taxes continue to rise, and landlords being really pointed as the enemy, which is ultimately going to mean higher costs for the landlord. There are more legal problems, more issues, more expectations. So all of these things are going to point to a big uphill battle for those leveraged landlords. But at the same time, if you're a real estate investor and you're looking at this and you're saying, hey, you know what, this could actually be a big opportunity, and it really could. It could be a huge opportunity if you play your cards right, if you're strategic, if you're really smart about how you go about it, not going about it completely recklessly, just saying, you know what, I want to buy my first deal. I don't care. I'll just buy it and I'll hold on to it. That's great. But you want to buy a deal that's actually a deal, not just you're buying something to just buy something. You have to invest under the pretenses of everything that's actually happening so you can hedge your downside risk, because you're going to have a lot of it. A lot of people are. Because this party, it's just getting started against landlords. What do you think about this? Do you think we're going to see a situation in which they might say national rent control, where they might say that you can't charge more than X for a one-bedroom apartment in this city, or more than X in that city? Or they're going to maybe push for like some type of universal basic income and issue some type of subsidy to landlords to offset some of these expenses, and then possibly that subsidy decreases over time. Who knows, right? At this point, who really knows what they're going to do? But you can see very clearly that they're serious about doing something. This isn't going to be the end. This is not going to be the end by any stretch of the imagination. It's pretty concerning to me, because when I first got into real estate, I looked at this as the best vehicle, because you can invest in real estate, you can borrow money at such low numbers, 5%, 6% interest rates, buy these properties, be able to control the value of these properties by either fixing them up, increasing the value simply by increasing the net operating income of the property. You're able to do cash out refinances, 1031 exchanges. There were so many different benefits of real estate and property ownership. And most Americans, they built their wealth buying their first home, paying it off. This is how people create their money. They create their money in real estate. They create their money by investing it over the long term. But when you penalize people for investing, when you penalize people for contributing, what does that ultimately do? It forces the masses on government assistance, on subsidies, on dependence. So this is a hell of a lot bigger than landlords. This is a hell of a lot bigger than tenants. This is a complete restructuring of our rights as Americans. What do you think about it? Drop below. Let's have a conversation about this. I think it's pretty concerning. I think it's foolish to ignore these realities. Look at the Renters' Bill of Rights. Look at all these changes, these modifications. It's going to be huge. It's going to be big, and it's only just getting started. Drop below. Let's have a conversation about it. If you want to fix your credit, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. Whether you have late payments, medical bills, collections, foreclosures, bankruptcies, repossessions, you have some problem on your credit report, it's holding you down, maybe preventing you from getting financing, maybe from doing a 0% intro APR balance transfer on a credit card, getting out of 25, 26% interest on one card, wanting to transfer it to another, but you don't have the credit score, you can't get approved. Fix your credit. We'd love to give you a free strategy session on my company, greatcreditfast.com, and I'll catch you guys in the next video.